On the podcast with us today is Jens Nielsen. Jens, welcome to the podcast.
Thanks, Dan. I'm excited about talking to you today.
Well, before we get started, because I know we're going to be talking about this 38 unit called Last Vistas out of Albuquerque, New Mexico, and you've had some issues that have gone along with this property. We kind of talking about it a little bit in the green room, but before we dive into that property, let's first talk about you and kind of let the listeners know who you are, your background, kind of where you are right now as far as the multifamily space.
Yeah, thank you. So people may recognize from my name and my accent, I wasn't born in this country. I came here in 1996. So I've been here, 24 years now, and did the typical, get a job, get an education, get a job, and work in the corporate world for many years. But it wasn't until, 5 or 6 years ago, I realized that probably wasn't the path going forward for me. And then I decided to, embark on the multifamily path. After looking at a bunch of different other ways to make some income, but everything else just looked like a job. And I felt like if you do it right, multifamily can be fairly passive and, can generate, great income and generational wealth and really help the communities you're in. So that's very quickly my background started on the East Coast. I was in Maryland for 10 years, then in New Mexico for 8, then in Colorado for 8, and now back in New Mexico. So I've been moving around the Southwest for the last, 15 years or so. So yeah, that's very quickly a little bit about me.
So let's go ahead and just dive right into this deal. And so this is going to be a little bit atypical for some of our listeners listening, because usually I try to find deals that are within the last 12 months, but we chose to kind of talk about this deal that closed about 2 years ago, but he's had some different things that have happened since then. So we're going to dive into some of those things. So we're going to probably spend maybe 15 minutes or so talking about kind of how you acquired the deal, some of the financing and, the investors, how you did that. I know this one was a JV, not a syndication. So we'll talk about some of that. But then I also want to dive into the other side of it. So everything that happened after closing, right? I think on this deal, that's probably the most interesting piece of it is what has happened after closing on it. And so let's first start off and just say, hey, talk to us about how you found this deal.
Well, people say that LoopNet is where deals go to die, but actually this one was listed on LoopNet. And I just happened to kind of, be browsing around and I saw it. I was like, wow, why is this not showing up anywhere else? And reached out to the broker, and basically this deal was listed at $1.5 million, a little over $1.5 million. And I connected with my partner in that, in our local market. I said, hey, is this a deal that we want to work on? He said, yeah, I think so. I don't think it's worth $1.5 million. He's a property manager, so he knows all the property. He said it's probably more like 1.3 or something. So, let's put an offer in and see where it goes. And it had already been under contract, fallen out of contract again. And we actually had all that they had gotten an inspection on it. So we knew there was a few problems. So we initially put an offer in at 1.3, I think, and it got accepted. And then when we started doing our due diligence, realized, well, that's probably even too much. So we were able to renegotiate and we got it down to 1.2 for those 38 units. So that's really kind of the initial negotiation, the initial kind of take on that deal. At a $1.2 million purchase price for 38 units. That may seem inexpensive for people in other markets, but as we continue this story, we realize it maybe wasn't that inexpensive after all, right?
Well, I was going to ask you, I know we haven't gotten into the meat of kind of some of the things that have happened on this property since you closed on it, which we're going to get there. But so you talked about, LoopNet is the place where deals go to die. Are you still looking for deals on LoopNet, or has LoopNet, because of this property, kind of turned you off?
And I'll still look. I mean, sometimes you find something that other people have overlooked, and for whatever reason, I won't totally discard it. But this is the only deal I've ever made an offer on that actually came off of LoopNet. So they're there, but they're far in between to find some good ones for sure.
Yeah. So let's talk to you about this. So on this one, obviously it had already been under contract, fallen out probably a couple times. I'm not really sure how many, but you're obviously now the last one that put this thing up under contract. Did you have to put any significant earnest money up?
No, I think that the sellers were just like, hey, we want to get out of this deal. This was nothing against people from California, but I see people come out of California, they look kind of to the Southwest, especially like Albuquerque and maybe even Arizona. where deals, they look inexpensive compared to prices in California, but they forget to look at the other side, that the rents are pretty low, right? So somebody had bought this deal, 5 or 6 years before us, hadn't been keeping up with it, and were just losing money, and they just were tired and just want to get rid of it. I think they would have probably given it to us, so they just want it out pretty much.
Yeah. Yeah. And how many rounds back and forth with the seller did you go to kind of come to this 1.2?
We got accepted pretty quick, and I think it was about 1.3, got that on the contract for that price. But then after that due diligence, man, it needs more work than we thought. So we renegotiated. And I think at that time they're like, yeah, we'll accept that. Just get us off our hands, I think.
Sure.
Right?
So what are talking about due diligence, what are some things that you found during the due diligence that caused you to go back and retrade?
Yeah, and I know that's maybe not always be looked at favorably to retrade deals, but in this case, it was either that or walk away. So in the Southwest, lots of properties are built, stucco exterior, flat roofs, and not maybe the best quality construction. It was built in the 70s. And we realized the roofs definitely need to be replaced. And that we typically always do that just because we don't want, leaks after we started rehabbing the property. Realized the roof needed redone. It needed new stucco, needed new windows. It needed the parking lot resurfaced, and then a significant amount of interior rehab and plumbing issues and so forth. So we're like, there's a lot of money need to be put into this deal for it to make sense. We can't pay more than 1.2, and the seller accepted that. So that was, maybe good, maybe bad. We'll have to see.
Mm-hmm. So how much did you kind of allocate? Obviously you're buying this for 1.2, but how much did you allocate or, bring into this deal for some of those deferred maintenance items, as well as some other, capital expenditures that you were planning for?
Yeah. So really what ended up happening, we knew it was going to need a lot of work. We budgeted around 500, 550 for rehab, including, all the things I mentioned, plus all the interior rehab. And, so that was, pretty much, another 50% on top of the purchase price. And then we went to the bank and we were like, how can you guys help us finance this? And they said, well, we can only really lend you 50% of the purchase price. So they were going to give us 600,000, and we had to come up with the other 600. But then they added, it was kind of an interesting deal, right? A local bank, they would give us another $550,000 for rehab and roll that into that mortgage. So it's kind of like a mortgage plus construction loan all rolled into one. So that was an interesting model, and helped us not having to do like a bridge loan or something. So it was just that was a good model, I think, and that has helped me. That bank has really been working with us on other deals in a similar manner. So that's been very awesome.
What was the occupancy on this when you acquired it? Now, talking about physical occupancy first.
It was pretty, I think we had 2 vacancies. So it was pretty well occupied because the rents were really low, right? Mm-hmm. And you can always get tenants if you make your rent low enough, even though it's a pretty crappy property, right? So
yeah. What was the economic vacancy or economic occupancy?
Back in just 2 years ago, I seem to remember it was pretty good. People were paying rent. We didn't have a ton of problems. I think we may have to, evict 1 or 2 people over the first few months, but nothing really significant there.
How are the laws in New Mexico in regards to evictions?
Now they're obviously a little bit different, but back then, it's a pretty, 50-50 landlord and tenant friendly. I mean, we can definitely get people evicted, 30 days. And so it's not that hard, go to the courthouse and get a notice, and then, you get a way to lock the doors. So we can get them evicted in a month or two. It's not too difficult.
Yeah. Yeah. Now, how did you end up structuring this deal with your investors? Because I know we had mentioned earlier on, this was a JV partnership kind of structure. It wasn't a syndication where you're bringing on a bunch of different investors. So talk to us through that. Yeah.
And I'm glad we didn't do a syndication, because I think if you do a syndication and you run into a bunch of trouble, your passive investors may not be quite as they may not understand why and be as lenient with you. We did a JV, so we brought in, we were 5 of us, and we each brought, a portion of that $600,000 we brought to the deal, And it was pretty even. I brought a little bit more than some of my other partners, but it was just, hey, we're all there in this together, and everybody has a role to play. And I think that can work out well. Obviously, it's a recourse loan, so that's another challenge that maybe most investors don't want to deal with, right? But we felt that was okay on this deal.
Yeah. So let's start to kind of talk about closing, right? So you close on this property day one, we're taking over, things are happening, and obviously, we're encountering some issues. So talk to us about kind of what are some things that have happened kind of post closing that be important for us to be able to kind of dive into.
Yeah, so we closed on a property, and we got, I think it was 18 months of interest only, so that gave us a little bit of breathing room there. Closing a property, we start taking over management, and we just kind of, just start doing some of the exterior work because. So initially it was just like, let's replace the roof to make sure that we don't have any leaks, right? And then we started digging into, okay, so what is it? We had a good feeling for what needed to be done, but then we're like, okay, what is the reality here, right? So we just started kind of doing the exterior roofs, and then we actually decided to replace 144 windows in that deal, as well, just to get new double pane windows. And then we started, okay, so people are, they always seem like there's a few people that leave when a new management team comes in. People started leaving, and then we started, working on the rehab. And then that's where we started to encounter some of our first kind of unknowns that we weren't quite aware of as it relates to the plumbing and being a building from the 70s. And there were some issues that we couldn't really see until we started pulling the sheetrock away, right?
So what were some of those plumbing issues that you encountered?
Basically, just patchwork, essentially, that had leaks. They had kind of been in there, and put some chewing gum and some wrap around with duct tape to fix it. Maybe that's exaggerating, but essentially it was just been not maintained well. Many problems with just ongoing copper deterioration, leaks, and not even having like shut off valves. So as we would go in there and like redo the bathroom, there was no shut off valve. So we had to turn the water off, put a shut off valve in before we could put a new tub in and things like that. Right. And just finding multiple problems behind the walls. It's always the scary ones, right? And they're hard to safeguard against up front because, unless the water is like coming out the wall, who knows, right? What's going on behind there. So.
Mm-hmm. So in these bathrooms, you were replacing what items?
And this is probably another learning, a little bit of, we probably overdid the rehab a little bit because this is a Class C property. I mean, maybe C+ once we're done with it. But we went in there and, we pretty much started tearing out tubs, shower walls, even cabinets in the kitchens, vanities, all those things. I mean, pretty much down to the studs in several places. And that ended up costing probably a little bit more than the rents would warrant. So at some units, it would be $10,000, $15,000 to go in there. And we struggle a little bit with getting, people to do the work because kind of doing a little bit of a construction boom here, a couple of years ago, and people would rather go and build new houses and stuff versus going and rehabbing old properties. So we had a little bit of trouble getting good crews in there, and they would work for a few weeks and then they would disappear. I'm like, oh man, now what, right? So that added some headaches there as well. So yeah, some of the units were basically new kitchen, new bathrooms, new flooring, paint. Even they were very closed off, the units, so we went in there and cut out like some weird empty like little dividing walls. We cut those out to open it up a little bit more, but had to rewire and relocate some of the electrical and everything. So that added time and expense for sure.
So what were the average rents before you bought it?
So these are all 1 and 2 bedrooms. And I think the rents were in the $550 for the ones and like $650 for the twos. That was pretty much market, plus utilities. That's pretty much the market price for an older property.
Now, where in your underwriting were you looking to kind of get it to? So you were doing these renovations, trying to kind of, improving it. I'm assuming when you're replacing, countertops and did you do new cabinets as well?
In some units, yeah, new cabinets, right?
Okay. So I'm assuming you probably didn't put like stainless steel, appliances in there and granite countertops and things like that. So where were you trying to get the rents to?
Yeah, and I think this is definitely a learning experience. I mean, our rent, we weren't thinking of more than maybe 100, about $100. So maybe the ones would go to like 650 and the twos would go to 750. And the return on the investment for the money we put in probably wasn't quite there. I think we over improved it, or probably spend more money than we should for the rent upside that we had, right? And that's certainly a bit of a learning experience there for sure.
Mm-hmm. So how many units have you renovated at this point?
Yeah, so to be 2 years in, and I think we have done close to 30. So I mean, we're pretty much there.
Yeah.
Yeah.
And where are you seeing the rents now?
Yeah, I think the latest ones it's been about that 650 for the ones and like 750 for the 2 bedrooms. Mm-hmm. Obviously, rent growth has been a little stifled here this year. So, but we're still able, there's a high demand. We're just not pushing rents too much at the moment to kind of make sure it's occupied,
So did your economic occupancy take a dip during COVID?
That's been very interesting in this market. We've not really seen any delinquencies, which is interesting. I don't know if that's going to continue or not, with the stimulus and everything ending, but really we've been collecting rent. I think we had 1 eviction in the last 6 months there. So, I mean, that's been pretty amazing,
No, that's great. That's great. So any other issues that have come up?
Well, so the plumbing, but really
I love it when you laugh when I ask that question, because I know there's probably a lot more.
So we started renovating, and we did, the roofs, the windows, the stucco, and even the decking. It's like, 2-story with an outside, walkways on the second floor. And we replaced the decking, got it all looking very nicely, parking lot resurfaced. And then we started, we did units that they would go vacant. And then one unit, we're like, it's really strange because there's in-floor heating here. There shouldn't be in-floor heating, right? And in reality, basically the copper, the hot water in the ground was leaking underneath the slab, with the result that we pretty much had to, jackhammer up the floor, figure out where this leak was. And we're like, well, if it's leaking here, why it's going to leak in all the other units too in this side of the property. So we ended up, cutting off. There's really those 5 units or 6 units on that side. So we ended up, terminating the water lines from the central water heater in the middle of that building, and then redo the plumbing and created soffits. So we would run PEX through the soffits on those units, up and down. So, I mean, we really had to replumb about 10 or 12 units there. So that was, people had to move out, and luckily we hadn't done work on them. So these were all, new unit or new rehabs. So, but that adds a lot of money that we didn't really have budgeted for upfront.
Sure. So how long did that actually take to get completed?
I think it took us I think it was 2 or 3 months we worked on that, right? Because we were like, let's kick everybody. That's not the right word. Let's move people to some other vacant units. Let's just get these units done. And we could work on all 5 at once versus like 1 at a time, right? So that helped. That helped with that.
So how was that conversation with those residents to be able to get them to move to a different unit? And did you have enough units available to move everybody to?
So a couple of units were already vacant. So I think we had to relocate 3 of them. And the conversation was actually, hey, you can get a new unit we weren't going to like force them to, so we can get a new unit for a slightly higher rent. So I think the conversation wasn't that difficult. Like, oh, cool. Yeah. So we would temporarily move them over there. Or my partner has a management company. So I think he may relocate 1 or 2 to another one of his properties. Right. So it wasn't that they probably were going to be out of water. So we didn't have much of a choice there. Right.
Yeah. And did you pay for them to get their stuff moved, or did you just tell them, hey, you need to move over here?
Yeah, I mean, these are small units. We just kind of, had some of our crew help them move their council and stuff. It's not like, you know, so that was pretty straightforward to do that.
Mm-hmm. So how much all in did that cost you guys to, redo all that plumbing and obviously lost rent and stuff like that over that 3-month period?
So let's put it this way. So the budget we had for the repairs has been spent, right? So we've spent all the money to do that. And I think the extra cost that we hadn't budgeted for that extra plumbing, I think it came to like $15,000 or $20,000, for the plumber and for new the pecs and all that stuff, right? So we kind of rolled it into the rehab budget. I said, hey, well, let's do this. And we've used cash flow. I mean, we've still been paying ourselves, moderate return on there, and then we've just been using extra cash flow to pay for it, and then the draws on that loan until we got up to that loan amount. Right? So it's not like we actually haven't gone in there and put additional capital into the deal, so we've been able to float it through cash flow and the loan proceeds.
So you had 18 years, I wish, of interest only, 18 months of interest only on this particular note, on this property. How long was the term on the loan overall?
Yeah, and actually we were able to renegotiate and got another 6-month extension on the interest only, because we were struggling a little bit. So we ended up getting 2 years, and that's again because of a good relationship with the bank. Local banks can be much more amenable to negotiating, right? So we got another 6 months, so that helped. And it was a 30-year amortization, 10-year term. I think interest rate is like 5% or maybe 5.25% or something. So pretty decent terms.
And are you guys in a position to kind of do a refinance at this point? Are you kind of waiting to a certain point down the road to do that, or what's kind of your next steps?
Yeah, so we have a little bit of a prepay penalty in the first, 3 or 4 years. So I think we are going to go in there, maybe give it another 6 months to stabilize a little bit more, make sure, because right now, the last 3 or 4 months has actually been our best months so far, and we want to just see that income continues, and we'll probably go in and maybe late this year, beginning of next year, see if we can refinance it, especially the rates being so low.
Yeah, I'm pretty sure they're going to be staying that way for a while right now.
Yeah, right.
So where do you think the rent growth is going to be on this property kind of 6 months or a year down the road?
Yeah, I mean, typically Albuquerque hasn't been growing. Well, it's a fairly slow rent growth. I mean, the last few years has seen 4 or 5%, which I think is abnormal. I'm thinking we're just going to see 2 or 3% and just kind of keep it fairly steady. So we'll just push the rents a little bit, $10, $20 as we renew, and see if we can get tenants in there. I mean, right now we're fairly conservative around, let's keep occupancy high. Like, let's try not to put more stress on our tenants, giving the hardships that they may be going through.
Sure.
But I think, if we can get I think an appraisal should be north of $2 million now, given our rent and giving our NOI. So I think we should be able to pull most of our capital out if we refinance it.
Yeah. And at this point, obviously you had mentioned plumbing issues are probably the major issue on the property. Obviously you had to pretty much replace a lot of the major components as far as, the roofs and doing the stucco and, doing the windows and things like that. Any other kind of surprises that came up along the way?
No, I mean, I think those are probably the major ones. I mean, the subfloor on the upper level was a little bit uneven. So we, after we pulled the carpets out or the tile or whatever it had, we would have to reinforce that, and we just put that vinyl plank flooring in to make it seem like that's the norm these days. But that was just, let's get these subfloors stabilized a little bit. Let's make sure that the floors doesn't start cracking and there's not too much creaking and so forth. So we did a little bit of that. I think with all the things we talked about, I think that was pretty much, kind of covered most of them. As you said, there were so many things. And I think the big lesson learned there is taking an old property like that and trying to go in there and do all that work. you have to get it at a really, really good price, and you have to be very patient, and you probably have to overestimate your cost by 10 or 20% or something. You know, it can work, but it's also going to be a long-term hold. You don't turn something like that in a few years and get all your, you know, investors' money back or something like that. So, but it's a niche that works too if you're willing to do that work, because, you know, most syndicators want to find something that, hey, a little bit of value add, raise the rents by a couple $100 and get out of it in 5 years. That model, it's not going to work in a property like this, you know.
So knowing what you know now on this property, if you were to go back, would you have acquired this property?
Probably not. You know, I mean, it's asked me in a year, right? If we've refinanced, put a lot of money out, and it's all looking good, yeah. If you'd asked me 6 months ago, I said no way, because that was when we were in the middle of, you know, leaking floors and you know, underground leaking water and stuff like that, you know. But yeah, I'm thinking, I think over time it's gonna turn out well enough. It's been a little bit, you know. I'm so happy that we didn't try to syndicate it, because if we had not been able to pay anybody for a couple of years, that really put a dent in our reputation, right? So luckily it's a close-knit group of people. Everybody understands what's going on, and nobody's, you know, too stressed out about it.
So it sounds to me like this property is kind of one of those properties where you look at it and you go, I might not have made as much money as I thought I was going to make on it in the beginning, but all the different experiences and the learning process through this process was probably where you made your money, if you will, because you got to kind of see everything full cycle and full circle of, you know, the renovations and the issues that can come about with it. And so it was really an experiential process.
That's true for sure. And, you know, we've looked at bigger portfolios in the same city of similar vintage and similar issues. I was like, man, yeah, this is not $5,000 a door to fix it. This is $20,000 a door, right, to fix it. So we know now that just because it's cheap, it's not necessarily a good value. And I know so much more about the construction quality in this market. I know what you should and shouldn't be buying. And, you know, I still invest here because I think there are still deals to be had. But if you come from the outside, it's like, oh, look at this, I can buy, you know, something at $35,000 a door. Yeah, be willing to put another $20,000 in per door before that is going to be a property you want to own, right? And I think that's really been the major lesson there. And you know, it's one of these things, right? You go into a deal and you have a set of plans, and then you get knocked in the teeth, and then you have to adjust along the way, right? And then just kind of come up with something. But I also know any syndication deal, anything bigger, we're not going to touch something of this quality, right? We want something that's better and less risky.
Yep. So I got two final questions for you. I ask everybody that comes on the show these two questions, and they're kind of contrasting questions. So the first one is really, what did you do, or what did you find, if you will, what did you find that was easier during this entire process that maybe in the beginning you thought was going to be a little bit more challenging? And maybe there isn't anything, I don't know.
You know, I had thought maybe the lease-up process was going to be a little bit harder, you know, once we have had some vacancies and start bumping rents. But actually, there's been plenty of demand for the rehab unit, so that's been pretty straightforward, actually.
Mm-hmm. And the last question is, what did you find that was harder than originally expected during the entire process that you thought might have been a little bit easier?
Yeah, I think just it took way too long to turn the units, right? I mean, we had thought, 18 months and we'd get them all done, and we're 2 years in, and we still have some units that haven't been done yet, right? So just the slow process of rehabbing is really the biggest challenge, I think.
Yeah. Well, Jens, tell us a little bit about how somebody can reach out to you if they have further questions for you about this particular acquisition, or maybe, join you on one of your next acquisitions that you have.
I appreciate that, Dan. Yeah, so people can go to my website. That's opendoorscapital.com, opendoorscapital.com. And if anybody want to get on a free call, they can go to opendoorscapital.com/call. It's a free 20-minute call if anybody who wants to. And my email is Jens, Jens, @opendoorscapital.com. So, yeah, I'd love for people to reach out to me, and if they want to learn a little bit about the challenges we encounter, I'd love to talk about that, or any of the less challenging deals that we're working on now, right?
Sure, sure. Well, thank you so much, Jens, for being on here and sharing the experience that you had on this particular acquisition. I know our listeners are going to learn a lot from it, and looking forward to continuing to follow you. And as you close more deals, looking forward to having you on one of our future episodes.
Thanks, Dan. It's a lot of fun.
All right. Thanks, Jens.
See ya.